Team Eureka from IM Codico present analysis of the business scenario and potential business opportunity for Walmart in short, mid and long term.
Indian retail structure has manufacturers and farmers who are the suppliers and retailers and small business who fulfill the demand of customer. The gap is bridged by wholesalers. The question is, why Walmart has entered into JV with Bharti? The main reasons we feel are, number one, understanding Indian retail and building a strong backend infrastructure for multi-brand retail in future. Second, create a goodwill with big retailers, generate economies of scale and establish private labels, which is the key success factors of Walmart business worldwide. Easy day. Walmart is providing back-end support to Bharti's 100% subsidiary, which has its presence in northern and central part of India. Bharti in turn is focusing on customer experience and providing extensive training to its sales staff. Walmart here is able to leverage on its strength as 15% of the revenue from the private label products come from Walmart. But what is the catch? There's a cap of 25% on proportion of products supplied by a foreign company imposed by Government of India.
Let's do a SWOT of Walmart. The strength of Walmart are, it has an early mover advantage in retail space, Walmart has high supply chain capability and the financial muscle to invest in infrastructure. Let's look at some of the weaknesses. It lacks expertise in cash and carry format. Also, it has limited understanding of Indian customer and market. Walmart is also criticized for its not so good relationship with suppliers. If we look at the opportunity, there seems to be a strong opinion in favor of opening FDI in retail owing to its perceived capability to contain inflation. For Walmart, there is a huge scope of expansion in Tier 2 and Tier 3 cities due to high supply as well as demand. There is an opportunity to gain higher margin through private labels and leverage Bharti brands and Indian IT expertise as well. The FDI sector faces threat from political activism and resistance from existing retailing outlet. Regulation, poor logistic and credit facilities provided by unorganized wholesaler are some other challenges. For evaluating the business strategy for Walmart, we have employed the scenario planning tool. If we rank top 5 critical uncertainties in Indian environment, regulatory environment with respect to FDI, contract farming, cash and carry top the list, followed by infrastructure development in terms of road and port connectivity.
Let's see how these two factors play out in short term. If both infrastructure and regulatory are in Walmart's favor, then we would have 100% complete golden quadrilateral, a railway freight corridor program launched, inflation forcing government to open up FDI and multi-brand, amendment of APMC Act easing way out for contract farming. Let's see if Walmart does not get lucky with regulatory issues. Then Walmart would be dealing with increased tax rates and still protected multi-brand retail. And what if infra does not keep up to our expectation level? In this case, there would be reduced investment on roads and infrastructure development will take a back seat. If both the sides do not augur well, then Walmart competitors, say Tesco, will be moving out of India. So given this scenario, these are the options and implications for Walmart. Situation 1 will be highly competitive and favorable. So Walmart should roll out distribution centers and strengthen relationship with customers and suppliers. In situation 2, Walmart should leverage improved infrastructure to overcome taxation handicap. Thus, it should plan to utilize cheaper railway service and collaborate with retailers to achieve economies of scale. In case 3, Walmart will achieve break-even with no economies of scale. Here, Walmart should lobby with government, limit its expansion and look for collaboration with other retailers and third-party logistics. In situation 4, with no competitor, Walmart should concentrate on limited location and increase its ticket size for each store. Let's look at Walmart's strategy from 2011 to 2013 under 4 steps. In preparation stage, Walmart should look for alliances with retailers, identify location on golden quadrilateral with railway proximity, engage in dialogue with railways, create program for long-term customer and supplier relationships, and invest in training centers. Under capability development, Walmart should further convince Bharti Group for other alliances. It should identify logistic partners, suppliers, and institutional customers. It should focus on studying Indian consumer behavior and buying pattern. In delivery and launch cycle, Walmart should start supplying to other retailers, construct distribution infrastructure, get large businesses from railways, establish procurement channel with suppliers, and get PSUs as customers to impart role-based employee training. For expansion, Walmart should operationalize the investment in distribution, engage railway as an investment partner, provide value addition service to suppliers, reduce its transaction costs with government, and deploy trained employees to ensure better customer service.
Again, let's see how these two factors play out in midterm. If both infra and regulatory are in Walmart's favor, Walmart can expect licensed shopkeeper with no evasion of sales taxes, 100% completed golden quadrilateral, a railway freight corridor program launched, inflation forcing government to open up FDI in multi-brand. Let's see if Walmart does not get lucky with regulatory issues. Improved port infrastructure enjoying SEZ status, requirement of capital investment in cold chain and warehousing to precede retail operation. And what if infra does not support Walmart plan? Increased costs due to increase in taxes, but opportunity to own farmlands. If both the signs do not augur well, then it will see poor connectivity which will keep rural market out of reach. Political activism will be a major headache and will require deft handling. So given this scenario, these are the option and implication for Walmart. Situation 1 will be highly competitive and favorable, so Walmart should roll out distribution centers and strengthen relationship with customer and suppliers. In situation 2, Walmart should lobby to get tax benefit for its investment in ports and other supply chain infrastructure. In case 3, with stunted growth and mounting operating cost, Walmart should either lobby with government for opening multi-brand FDI space or delay expansion plans. In situation 4, with no competitor in urban space, but Walmart lagging in agribusiness space, it has to improve its relationship with farmers and invest in rural infrastructure. Let's look at Walmart's strategy from 2013 to 2016 under 4 steps. In preparation stage, it should engage in dialogues with retailers, identify rural location, talk about possibilities with IRCTC, create quality guideline for contract with say Farm Fresh, and provide credit facilities for small stores to switch. Walmart should also explore training arrangement for suppliers. Under capability development, Walmart can provide IT equipment on franchisee basis. It can invest in rural infrastructure and explore joint development with FCI. It can venture in microfinance and rope in institutional customer like Horeca. On learning front, it can sit with supplier to help them better understand customer requirement. In delivery and launch cycle, Walmart can provide training at its knowledge centers. It can also rent out its warehouses and make government bodies like FCI dependent on its logistic and warehousing capabilities. It can further increase its power by providing training to government employees. On supplier side, it should focus on quality. For expansion stage, Walmart should make its training and support activity as a separate revenue stream. It should partner to improve the extensive PDS network and move interior. It should be able to bargain low prices from FCI and focus on efficiencies. In the existing customer base, it should try to gain more wallet share.
Looking at the current developments in retail sector, we perceive that 2021 will be a critical point of time when there will be a strategic shift in companies' outlook towards retail sector. Based on 3 factors, critical performance review, future outlook and headquarters view, the decision to stay or quit will be quintessential for business strategy in future.
As far as positive scenario goes, we see the growth in online retail, which will achieve more personalization, increased reach of retail even to remote villages, and more investment from foreign companies in the sector, which mean further expansion opportunity for Walmart. Possible avenues for Walmart would be in mobile retail, rural penetration, further expansion in private labels. The other scenario could be where some of the retail formats are going bust, and at the same time there are political and economical externalities affecting bargaining and market power of foreign companies. In this scenario, the strategy for Walmart would be to plan exit by selling to Indian retailer who is looking for backward integration, but nonetheless to keep lobbying and lobbying until the asset transfer deal is made. If the situation is promising, in the preparation stage, the focus would be on online retailing, extensive quality measure for supplier, credit facility for a small store to enable them to switch, and also it should analyze 5-year historical data to identify trusted supplier. Under capability management, Walmart can provide IT equipment on franchisee basis, leverage last mile delivery capabilities, contract with Conviva to create VAS. It can invest in rural infrastructure and explore joint development with FCI. It can extend its commitment in microfinance and rope in institutional customers like Horeca. On learning front, it can sit with supplier to help them better understand customer requirements. In the delivery and launch cycle, it can use Airtel platform to provide delivery of its services and merchandise. Walmart can also provide training at its knowledge centers. As discussed earlier, it can also rent out its warehouses and make government bodies like FCI dependent on its logistic and warehousing capabilities. It can further increase in power by providing training to government employees. On supplier side, it should focus on quality. For expansion, as we have discussed earlier, Walmart should make its training and support activity as a separate revenue stream. It should focus on pricing and efficiency. It can also expand to other telephony provider. If the environment is bleak, then in preparation stage, the focus would be acquisition and lobbying. It should also take the learning from the Indian retail experience. In the capability development cycle, it can acquire foreign players who may be quitting and look for export opportunity. It should slow down organic expansion. In the delivery and launch cycle, the focus would be cost reduction and margin expansion. Existing relationship with government need to be managed well. It can look for learning from successful competitors. For expansion, Walmart can look for economies of scale and look for innovative retailing opportunity like railway station. It has to innovate in service offering and increasing range of offerings.
With the metro cities saturating in organized retail, the future of retail lies in emerging cities. These cities are less saturated than the metros but have greater spending power. Middle class and lower middle class from majority of the households, with more than half of the million population falling in this category. Secondly, organized retail penetration is lower than in any of the metros, with traditional retail ruling the market across these geographies, thereby providing a greater scope for Walmart to penetrate into these markets. Ludhiana being already targeted, Walmart should find opportunities in emerging cities like Ahmedabad, Pune, Kanpur, Mysore, etc., which contribute to $15 billion worth total retail activity. The spectrum of cities could be divided into 3 categories based on retail potential: high growth cities, emerging cities, and potential cities. By 2013, we see Walmart to penetrate into high growth cities like Pune, Ahmedabad, Chandigarh, Kochi, Vadodara, Jaipur, and Lucknow. Emerging cities like Indore, Amritsar, Mangalore, Kanpur, and Mysore would be the next target. The list of potential cities is speculative, which may change in due course of time, but some big names including Bhopal, Patna, Sonipat, etc. will be present.
From logistic planning point of view, India freight network is highly concentrated. 15 high-growth production consumption cluster, growing at 1 to 2% higher than the country's GDP, are expected to witness the highest traffic volumes in the country. 7 corridors connect these 15 major clusters. Rail links comprise 27% of the Indian rail network but handle over 15% of the rail freight traffic in the country. Walmart could leverage low-cost railways to connect to major cities of its Vision 2021. The rural retail revenues are estimated to increase by 60% by 2012, with a larger share of increase in demand for consumer and household products. But at the same time, penetration into this market is limited by infrastructure limitation. ITC E-Chopal, DSCL's Hariyali Kisan Bazaar, IOC Kisan Seva Bazaar are already trying to fill up the gap of last leg operation in the rural areas. Walmart can leverage upon its distribution strength to provide a scale of economies and becoming a key link between the supplier and these retailers. Sourcing option will also be easy to explore through this channel by forming partnership with cooperative and self-help group related to these channels. The booming infrastructure in India provides another opportunity for innovation in retail sector. Transit channel will be an upcoming market for leisure and entertainment retail segment. Duty-free and duty-paid retailing at airport, while tenders for retail development at metro station are some of the avenues where Walmart, along with Bharti, should see opportunity to innovate.
Overall, the retail activity in India is on fast track, fueled by burgeoning economic activities. Walmart has a healthy expansion option for its business in India, but the key to success will be competing intensely with other players with newer organized retail formats and by driving innovation in existing formats. Thank you from Team Eureka.